Hello and welcome to the ninth lecture of the course Forex in 3 steps. In the previous 2 lectures, we talked about the financial markets and how to be a successful trader. And in this lecture, we will be talking about the features of the foreign exchange market, which is also called the Forex market. The Forex market is one of the most popular financial markets and it is very popular, especially to beginners. So let's hop straight into it. Let's start off by first addressing what does trading mean? Any buying or selling process aimed at making a profit is considered trading. We need three things to complete any trade: a buyer, a seller, and a commodity or a financial asset. So, how are prices determined in the forex market? Just like any market in the whole world or any type of product, the market, the forex market moves by supply and demand. When demand is higher than supply, prices go up, and when supply is higher than demand, prices go down. We will discuss supply and demand much more deeply as we move on to the lectures and we move on to the course. But for now, that's all you need to know. Supply means prices going down, demand means prices are going up. So let's explain some of the currency pairs and some of the popular ones. Of course, the forex market, by now you should already know, the forex markets are all currencies against each other. So, for example, one of the most popular foreign exchange pair or market is the Euro USD. What does this mean? This means that the euro is against the US dollar. The symbols look like this. So when you're charting the financial market or you're looking for something on the news or something, you will find it like this: euro and slash USD. So what does euro slash USD mean? It means that both of them are against each other, and usually always the first pair is the one you are buying, and technically you are selling the other pair. So, for example, if I choose to buy Euro USD, I open a long position or a buy position. All right, I open the trade. As soon as I open the trade, it means that I bought Euro and I've sold the dollar. And vice versa, if I choose to open a sell position or a short position, that means I'm selling the Euro and I'm buying the dollar. This is very important to know so you can understand what exactly you're doing depending on the position you're in or depending on the trade you're opening inside the financial market or inside the pair. Let's take another example, for example, USD JPY. All right. If I go open a long position or a buy position on USD JPY, what does that mean? That means I've bought the USD and I'm selling the Japanese yen or the JPY, which is the shortcut, and vice versa. If I choose to short or open a sell position on USD JPY, that means I'm selling the US dollar and I'm buying the Japanese yen. Hope this makes sense by now because you'll need to understand what exactly is happening and which pair you're buying, which you are selling. Because if, for example, you're reading the news and you forecast that the euro might drop and the US dollar might rise in price, then you should come to this market, for example, and open a short position or a sell position, which means the euro, you're predicting that it will fall in price and the US dollar is against it. So in this financial market or this currency pair, so you predict that it will go higher. Let's talk about some of the features in the forex market. First of all, it has very high liquidity. The largest financial market in the world is the forex market. It also has flexible hours. It operates 24 hours a day, 5 days a week. And of course, Saturday and Sunday are the days the markets close. It has leverage trading, which makes you increase profit opportunities and also losses. But if you have a profitable strategy, you can use the leverage in your advantage to increase your capital quicker. The Forex market has a variety of currency pairs, which makes it one of the best markets and opens more options and more financial markets to trade from. and it also has profit potential in both rising and falling markets, which means you can buy and sell. Some markets do not allow selling, you can only buy. For example, the stock markets, you can only open buy positions, not short positions. So, of course, after you buy, you can sell your stuff, but you cannot open a sell position, which is basically the opposite of buying. You profit when the price goes down, and we'll talk about this later on in the course. And that is it for this lecture. Was a very brief introduction about the Forex exchange markets, and I'll see you in the next video.